is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, you and I started this show as a DeFi podcast, but it's since diversified into other areas of Web3. But today we're going to bring it back to our roots with a conversation with someone who is an instrumental individual in one of the leading DeFi protocols in the world. And that is the dYdX. And our guest today is Charles DeHousey. Charles is the CEO of the dYdX Foundation. The mission of the foundation is to support the dYdX protocol ecosystem by empowering communities, developers, and decentralized governance. Charles has experience as an entrepreneur, a fintech startup executive, and head of fintech with the Hong Kong government, where he served 450 international fintech companies and steered the growth of the Hong Kong Fintech Week, which reached over 10,000 global attendees. dYdX, for our listeners, if they're not familiar, is really the leading decentralized platform for derivatives that's used by what I would describe as sophisticated, professional, or advanced traders. It's grown enormously since first launching just a few years ago. And I think at its peak was doing over $10 billion a day of notional dollar volume. So the platform has had immense success, and I think in many respects demonstrates how quickly you can see scalability within DeFi with these open composable systems. Charles is also hopefully going to talk a little bit about something that we're really interested in, which is that dYdX, which is this immensely popular protocol with various applications built on top of it or interfaces for it, is about to migrate from an Ethereum layer 2 network known as Starkware to the Cosmos network, and in the process develop its own app chain. That's a process that's currently begun already, and we're going to learn a little bit about how that's going. But that's something that we talked a lot about too on the show, the idea of applications in Web3 having sovereignty, having their own chain, and what that really looks like. So it's going to be a great discussion, a talk about DeFi fundamentals and maybe where we're going, but also we're going to get into some of the mechanics of what it means to move from one chain to another. And I think what that represents really for the future of Web3. So before we go any further, Charles, thank you so much for joining us from Hong Kong, and welcome to the show.
Thank you, Alex. Thank you, Andrew. Glad to be here.
So let's kick things off, if you don't mind, with a little bit of background on yourself, because we're going to talk mostly about the project, but we're always curious on this show to learn about individuals and how their journey got them to where they are. So tell us a little bit about, your journey, how it is that you came to be the CEO of the dYdX Foundation.
Absolutely. So if I start very much from the beginning, I'm 45 years old, and I discovered the internet in the late 90s. From the internet, I get some kind of appetite for the technology. I started to build some website and understanding how files will be hosted on servers. I was a student at the time with a student budget, and I was introduced later on peer-to-peer file sharings to start to exchange music via Napster, later on some other protocols. And in this kind of introductions to peer-to-peer computing, the Bitcoin white paper came about and enriched me in 2011. And the peer-to-peer aspect of Bitcoin was very natural for me and easy to understand. But I realized I still had a lot to learn in terms of what is exactly money and how is this kind of powering the economy. And that was the beginning of my journey in crypto. Later on, I was executive in various companies. I was with the Hong Kong government as head of fintech. So that's really kind of give me some early experience in building and shaping ecosystem where finance and technology gets together. And Hong Kong is a place where it's really important to kind of renovate the legacy of an international financial hub. And later joining ConsenSys, the company behind MetaMask, as head of Asia before joining dYdX. So I'm the CEO of the dYdX Foundation today. We are one of the entity within the dYdX ecosystem, which is today focusing, as you mentioned earlier, on the crypto derivative, and is the #1 decentralized exchange globally for crypto derivative. So all this journey is a mix of finance and technology, and I know that we are all here today for this kind of fascinating mix and crossroads of two topics of importance.
Terrific. Well, that's wonderful. Yeah, I feel like a lot of people came at Bitcoin from the peer-to-peer world, from file sharing, and saw, in it something familiar, but also maybe something revolutionary as well. And I love that, Bitcoin in many respects is sort of the first killer application for blockchain, and what projects like dYdX have been able to achieve is to take that principle of the peer-to-peer exchange of value and apply it to a wide range of assets and also a wide range of functions in the economy, like, say, derivatives. So can you talk a little bit about the history of dYdX? How is it that it started or how is it that it came to be the leading derivatives platform? Because I think to the extent that anyone outside of crypto knows the names of any of these things, which still early. Uniswap is one that I think, maybe has cracked the mainstream a little bit. People say, oh, I heard this thing called Uniswap, but dYdX does something very different. Can you talk a little bit about that?
Absolutely. So dYdX was created by Antonio Giuliano, a former Coinbase engineer, back in 2018. And the history of the protocol went from building an option financial protocol on Ethereum layer 1, later on evolving due to the success of the platform when it finds some kind of product market fit with crypto derivative. The platform dYdX was a very early user of what we call layer 2, this technology to kind of scale Ethereum layer 1. So dYdX was existing on Starkware, and after the success of the application and reaching this critical size and this early product market fit, eventually, about 2 years ago, a journey started from engineering perspective to start to say, okay, there is an application which is extremely successful. This application is essentially sitting on someone else's software. Just imagine that a blockchain is an operating system, and you always have, as an application, some kind of dependency on the pace of innovation, the pace of progress in the roadmap of the underlying software you're sitting upon. And with the size, the critical size dYdX has reached, decision was made from the engineering team to essentially starting to create our own chain. So this is what we call the app chain thesis, where an application has reached a critical size enough to be able to build its own blockchain. And this is exactly what happened about a month ago now. dYdX started to migrate to its own dYdX chain, which is built out of the Cosmos SDK. So it's a sovereign chain with its own validators. The token economics of the dYdX token has been totally revamped, and the governance token became a utility token. And to come back to your earlier comment, which is a great thought, Alex, why maybe Uniswap is maybe more common in people's mind when it comes to DeFi, is maybe the reason that dYdX is extremely focused from day one on derivative markets. So the user base of dYdX is 80% institutionals. Think of large crypto market makers or crypto investors. And the retail part of the audience of dYdX is much more what we call like super users or very mature traders, which are using derivative contracts to express more complex and more constructed opinions on the market. So this is really the big distinctions between Uniswap. Uniswap is spot. So it focuses on spot trading, whereas dYdX focuses on derivative. And maybe one last point also, which is important to capture for the audience, is the derivative market is 10 times bigger than spot. So we find exactly the same pattern as we find in the equity markets. Whenever there is, let's say, a Coca-Cola share being sold on the equity market, there is 10 Coca-Cola shares which will be exchanged on the derivative kind of layer. And the same pattern applies to crypto derivatives. So that's a very important side of the market, which addresses a more complex and kind of mature type of audience, but definitely part of the crypto industry.
Yeah, for sure. And I think another distinction too is obviously derivatives are a far more capital efficient way of trading tokens, and that's why you see dYdX having much better liquidity for kind of the blue chip tokens versus kind of like spot exchanges like Uniswap, which kind of capture more like the long tail of tokens.
Absolutely.
And I believe actually dYdX, at one point you guys had a spot exchange as well, or maybe you still do, though I know the focus is more on the perps. I really want to dive into this decision to build out your own app chain. This is actually something that Alex and I talk about quite a bit on this podcast. We're actually quite big believers in sort of this, the multi-chain thesis, as well as this idea that leading dApps and leading DeFi protocols will end up building their own sort of sovereign chain. And so so we've always been really interested in dYdX, just because, sort of like Alex said, dYdX was one of the very first DeFi protocols to move to an L2. And now what's interesting is a lot of projects are moving to L2s, and you guys are now moving to your own app chain. It seems like you guys are sort of ahead of the curve there. I want to dive into, so one of the big sort of motivating factors of building out your own app chain was to decentralize the entire stack, including the order book. So I was just kind of curious, how does dYdX chain help you guys decentralize the project, and how is that, I guess, beneficial for users?
And also, before jumping into that, maybe just talk a little bit about the thought process in the migration to begin with, and then to answer Andrew's specifically. Thanks.
Absolutely. So, as mentioned earlier, dYdX reached kind of a leading position today. We represent about 1 to 2% of the global market of derivative, 70% of the decentralized exchange derivative market. So we still have a long way to go, but already a sizable market shares and audience. The dYdX has been well known and built a reputation of being a blockchain agnostic, which is something which is not always very common in our space. All the thoughts within the engineering team and the ecosystem overall are kind of first principle led. It all starts from the user. So we're not as tribal as some other project might be from time to time, saying, okay, I was born in Ethereum, I should stay within Ethereum, whatever it costs. It's really starting from the application, what the user wants, what is the kind of direction the product should be taking to keep its dominance and grow in terms of market shares. And from there, what are the most pragmatic decisions? And if there is some technology available at some point in time, this technology should be evaluated and eventually adopted if it makes sense. So in this process of evolving from being on Ethereum layer 1, then on layer 2, dYdX has been able to grow in terms of performance overall and audience. But the kind of one of the reasons dYdX decided to build his own chain was also to keep progressing on decentralization. So to be a little bit technical, dYdX is not an AMM like Uniswap, for example, where a smart contract essentially automates the market making process. dYdX is an order book type of exchange. So it's exactly the same as a NASDAQ order book or Binance or Coinbase order book, where the liquidity is really optimal, as well as the price discovery as well optimal. And on the Ethereum side of things, from the project, there is no blockchain, should it be a layer 1 or 2, which is capable to host an order book. So the order book has been always historically hosted off-chain on an AWS server. And that was clearly something which was always made public by dYdX, but really some kind of point of attention, thinking whatever the next generation of dYdX will come up, this is something we should be able to kind of address. So one of the reasons the dYdX chain came to existence was to control the full stack, so being able to be much more in control from all the different layers of software which are hosting dYdX itself, but also progressing in one key component in terms of decentralization, which was making sure the order book is decentralized and is not sitting into the end of one single party anymore, in order to provide a pure DeFi type of experience. So technically on the dYdX chain today, the order book is decentralized. it's not sitting on the blockchain itself. Otherwise, it will get a latency of the block time. Even though the block time is only 1 second today on the dYdX chain, in terms of trading experience, this is really suboptimal if there is always kind of 1 second latency. So technically, the order book is sitting on the memory of the validator. So about 60 validators are active on the blockchain of dYdX to make this blockchain alive, and they host a copy of the order book within their RAM memory and whisper each other the latest version of the dYdX order book in order to match order and later on settle them on the blockchain.
Yeah, I think it's a really unique strategy because it is still it's decentralized and distributed, but you're using kind of like the mempool to store the order book data, and so you get around the sort of limitations of having a fully on-chain order book, which, you know, like you said, it doesn't really fit your power users use case in terms of latency. So I always thought the design was really great. Can you dive a little into why you guys ended up choosing Cosmos SDK as kind of the platform for building out your own app chain? You know, we've had tons of Cosmos people on our on the podcast. We're definitely very friendly towards the Cosmos community. But yeah, I'm just kind of curious why you chose, I guess, Cosmos SDK versus, I guess, building out your own stack or using something like, you know, Polkadot or subnets or any of those other kind of, or like an OP stack, I guess.
All the engineers of dYdX have been kind of assessing and benchmarking the technologies. I think overall the choice of Cosmos was a natural fit in a sense that you can build your own blockchain, so you can really kind of fine tune the stack from the chain itself to you can choose a consensus you can give to your token the kind of functionality you want. If you want some connectivity with the Cosmos ecosystem, you can decide to connect to IBC or starting to have some partnerships and relationship with some other chains, such as Noble for USDC, for example, or Osmosis. So there is this really wide range of choices, as well as the freedom to really design the chain exactly as you want and bring a token mechanics which are really revamped and give a very healthy alignment between the success of the application, the mission of the project itself, and the token holders. So today, if the dYdX token holders decide to stake, essentially 100% of the trading fees generated by the protocol are given to the stakers in form of USDCs. So it's really the first time you see, if you could imagine, for example, the success of Uniswap today, moving hundreds of millions of trading volume every day, but yet the token is only a governance token, which allows you to kind of share your opinion on different directions, but you don't get any optionality to capture part of the value created by the protocol. Building the full ecosystem of dYdX on its own chain with the Cosmos SDK essentially gave the optionality to fine-tune things to get a chain designed for a single use case, not a general purpose blockchain, but also fine-tuning new token economics for the dYdX token and aligning the users with the kind of roadmap and destiny of the protocol itself.
Yeah, and that's actually something we've also chatted a lot about on this podcast, is this idea of real yield. And so to us, dYdX sort of captures both in terms of leading DeFi protocols becoming their own app chains, but then also this idea that you know, like paying validators a sustainable source of income, which comes from actual trading fees, versus just, you know, paying them token inflation, which is pretty much what every blockchain except for Ethereum at this point does.
Well, Andrew, though, isn't it possible to pay like token fees in like a governance token, but for there to be a buyback mechanism that keeps the float kind of constrained and in a way, like, you know, it's sort of like a stock dividend. Like, is it always the case that, you know, paying in a governance token is sort of long-term dilutive for stakeholders?
Yeah, I mean, I guess it sort of depends, right? Like dYdX, I think is interesting because you get paid. Again, correct me if I'm wrong, Charles, but I believe you actually get paid in the sort of native trading, like essentially in USDC. So as you stake dYdX, you get paid.
Yeah.
So that's like, I guess, more of like a true real yield. Whereas something like Ethereum, when you stake it, like Ethereum, you get more ETH, but I consider that a real yield as well because it's essentially coming from actual, it's essentially it's coming from revenue, essentially from transaction fees on the network. And then at the same time, obviously they have the buyback as well. So I guess it's maybe a different class of real yield, but it's sustainable in the sense that you're not relying on sort of token inflation to subsidize the security.
Can I ask a simple
to complement that, maybe Andrew, very briefly?
Yeah.
We have the chance at dYdX to be, so to say, a profitable protocol, and that's a rare situation in our crypto industry. So we stay humble about that, but there is a lot of people building, and they are in the early stage of their growth, and we wish them all the best. dYdX has a chance to start this journey back in 2018. And today, as an exchange protocol, essentially, the users of the protocol are paying fees, and these fees are generating proper revenue for the protocol, and the protocol is able to kind of share these revenues. And that's also a very encouraging, I would say, signal for the overall industry, that you start to see successful applications which are generating real revenues in USDC and able to kind of share these revenues. Rather than kind of sharing away some of the inflations from their token. So as mentioned by Andrew, the dYdX takers are receiving solid and hard US dollars paid by users to use the protocol, which is, in my opinion, quite fascinating.
Yeah, absolutely. So the simple question I was going to ask is, how exactly do you move an exchange from one network to another, and specifically the users? Like, how do you get people to like move it all over? How does that even work? And then also, does the fact that you've got power users and institutions make it easier or harder?
That's a great question. It's a long process. You want to plan for it. Something I want to kind of highlight is we are not expanding to another chain. You see a lot of DeFi protocol going in multiple layer twos. We are, as you rightly mentioned, we are migrating.
Yeah.
So eventually the version of dYdX on Ethereum will close down at some point in time. 80% of the volume on dYdX today are coming via systematic trading. So think of hedge funds, high frequency shops, bots, or institutionals, which are essentially consuming the dYdX protocol via API.
Yeah.
So the design of the new dYdX chain was really kind of driven by this idea of being the less disruptive in terms of transition, and making sure that it's not too much an effort for the vast majority of the users on the volume to migrate from one place to the other. Otherwise, there is also some reward system which have been in place and came from the governance. So the dYdX token holders can vote on governance and decide to kind of new options or new decisions around the protocol. And a reward incentive program has been voted and is today in production to essentially incentivize traders and market makers to use and migrate to the new platform. So it's still a process ongoing. So far, we've been reaching about $4 billion of trading in a little less than 3 weeks. So definitely the numbers are there, and there is a strong appetite for it. But it's something which needs to be planned along and making sure it's the less disruptive for users. And maybe one last thing to also capture is it might be a little bit easier for dYdX to do such migration, given we are in the derivative market. So we don't have the same need of composability as some other DeFi protocols. So for example, if you're in the lending business, you will need to be within an ecosystem where there is a lot of assets which can be used as collaterals, or people being borrowing assets for certain use. In the world of derivative, it's much more, I would say, simple. Everyone starts his trade with USDC. So USDC is also available now on the Cosmos ecosystem via Noble. And it's just it makes the migration also a little bit faster for dYdX.
Yeah, for sure. I think what's really interesting with dYdX, like you said, is it's more of kind of like a super app versus something like Compound, or which is more kind of like modular and exactly like you said, sort of needs a surrounding ecosystem for it to really function. I am curious. I know sort of from following the dYdX project, you guys are really focused on attacking this the sort of specific use case of derivatives. And you guys are kind of, at some point, you're going to be focusing more and more on getting other interfaces to build using, that hook into sort of the dYdX liquidity. I am curious, have you guys thought a bit at all about getting kind of other applications that are maybe complementary to the sort of derivatives use case, but aren't sort of derivative protocols themselves? So like just off the top of my head, maybe something like I don't know, an NFT project. I guess I know dYdX has their own NFTs as well, but I'm just kind of curious if the vision is to kind of like build out more and more of the functionality yourself versus having third-party teams sort of build on top of the dYdX chain, and maybe it doesn't become like a generic one-size-fits-all chain like Ethereum, but maybe broadens out a little bit more from just kind of from like a dYdX sort of dYdX only app chain.
From what we can feel from the dYdX builders, the community will remain laser focused on one single use case, which is the derivative markets. It's already a massive market which will be disrupted. As I mentioned earlier, dYdX represents 1 to 2% of this market today. If you kind of compare it to Uniswap, which represents, roughly speaking, 10% of the global spot market, there is really like some space for growth for dYdX, and there is all reasons to be optimistic about the kind of migration away from centralized crypto exchanges of the crypto derivative market to DeFi. So I believe the community will remain very focused on crypto derivative. People will be able to access probably via some decisions of people to integrate or different governance choice to decide to integrate or maybe access the dYdX kind of liquidity pool and trading protocol via multiple ways. One thing I see coming is a slow but very deep disruptions happening in the centralized exchange industry. In short, the centralized exchanges are getting more and more clarity about what kind of license they will be able to get. Some of them are applying for these licenses because they eventually get kind of a road to kind of compliance. But when you get a license, usually should it be in Europe or anywhere else in Asia, you will for the most part, you will get only a spot license. So what it means is if you get let's say you get your license in Hong Kong or in France or in the UK, as a crypto exchange, you will get a spot license only, and the regulator will tell you need to stop your futures business in the country which give you a license. So eventually what I predict is there will be less and less venues to trade crypto futures, and the market will remain large, but the number of venues will eventually kind of narrow down. And I predict that this flow will go more and more to DeFi. So that's a great opportunity for DeFi derivative and perpetuals in general. But I don't believe that centralized exchanges will let this business go quickly. If you kind of look and read between the lines, you see a lot of these exchanges starting to build their Web3 wallets. So, for example, the Coinbase Web3 wallet, the Binance Web3 wallet, the OKX Web3 wallet, which are essentially kind of services offered by these centralized exchanges saying, okay, you can keep and coming to centralized exchanges to buy spot, but they also facilitate for you access to DeFi, being some kind of gateway to DeFi. So this is, I think, one way we will see evolving the market. The early users will keep accessing dYdX via API and maybe some user interfaces. But a lot of people will eventually interact with dYdX with maybe via some of their centralized exchanges, which Web3 wallet offers access and facilitate access to DeFi.
That's really interesting. So that's almost like a vision of. So I guess my natural question from that is, could centralized exchanges one day be potential kind of creators of their own dYdX interfaces or things like that? I guess, is there any vision of, like you said, the centralized exchanges sort of serve as a distribution arm, and dYdX has built kind of like the base layer for them to launch their own decentralized exchange one day? Is that something you sort of see potentially in sort of the future, I guess?
All the code of dYdX is open source. So I would say many options are open for many people to decide how they want to do that. The way I see the industry going is the same way finance today is consumed mostly via banks. But the reality is the core business of a bank is deposits. And then from your deposit, they try to sell you insurance, which are coming from an insurance company. It's not an insurance coming from the bank. They sell you access to market, and they give you access to equity market via a prime broker, for example. So essentially, banks today are kind of aggregator of financial products, and they kind of package different things to make them simpler for you to access. And I don't see why the crypto asset category will be so different in terms of distribution. So yes, to come back to your questions, there is a world where eventually some financial institutions might decide to say, okay, I want to give access to part of my customer base when the risk profile fits to some derivative type of product, and the best place of derivative might be dYdX, where they get hundreds of market being listed, and also some kind of innovations, which is also discussed and actively built within the dYdX ecosystem today, which are the permissionless market, where you can potentially start launching new derivative market for asset of your choice within obviously a risk framework as well as a liquidity framework. But that's the kind of new market DeFi should be really focusing on. At least this is what we focus on at dYdX, thinking of not only digitalizing what is existing already today in some other part of finance, but starting to create products which are very unique to DeFi and can only exist in DeFi. And this way you really create some kind of new value proposition, which become a magnet for attention, users, and liquidity eventually.
Yeah, I was going to ask about the future growth for dYdX, and you've obviously just hinted at it a lot, because the question is, that I was going to ask at the beginning when we first had this conversation is, do you see yourself expanding from derivatives to the spot market or to say RWAs? And what it sounds like to me is actually, you have this platform that's purpose built for derivatives. And anyway, derivatives are 10 times the size of the spot market in other asset classes. So rather than expanding into things beyond derivatives, become the technology that can be used to enable derivatives markets for everything. And that sounds like a huge opportunity. So in a way, it's like almost like a parallel track of sorts to, the spot market in crypto, and the idea of bringing real assets on chain. This is taking the derivatives technology and applying it to, or taking the decentralized exchange technology and applying it to other derivatives markets. Is that like a fair characterization?
Absolutely. I think being a specialist has been really rewarding for dYdX over the early years of the history of dYdX. So that's why the market gives so much confidence in the product, in the teams involved in dYdX, staying focused on this key market that's the derivative. That's exactly right.
Just a quick question. You mentioned like stablecoins, USDC continues to be a topic we come back to. And in the Cosmos ecosystem, you've referred to this project called Noble a couple of times. And Noble we actually had Yelena Jurek on the show to talk about it. She's the founder. And they've grown like crazy since they launched, I think probably in anticipation of dYdX. But I'm just curious, like, is there enough US dollar liquidity on Cosmos to satisfy what's needed for you guys to scale?
There is definitely demand for it. Historically, dYdX is the fifth largest USDC holder globally. So we need to give time for all this kind of ecosystem around the dYdX chain and within Cosmos to accommodate the demand. But the numbers are really showing that the flow are coming in. Coinbase announced that USDC on Noble, therefore on Cosmos, was now native on Coinbase. I'm sure there is some additional kind of off-ramp from the Cosmos ecosystem, which are being built right now. So it's definitely growing. It was not existing from day one, but I think there is a great alignment of vision, and things are progressing well. So no worries on this side.
Well, not at all. And if anything, my conclusion from this is I'm very bullish on dYdX on Cosmos. And I'm just bullish on the whole Cosmos ecosystem in general. I think that, and we've talked a little bit about this, which is that this migration, if and when successful, is going to elevate, I think, the Cosmos world as a place where applications can go build their own sovereign chains and scale on their terms, right? And I think that's very interesting as well. Well, we'll have to come back to that, Andrew, on another episode at some point.
Alex, maybe I can share with you something I was discussing with some of my family members around a dinner a few Sundays ago.
Sure.
And they were asking me, why are you building your own blockchain, and why is that? And
this is the kind of discussions you have over family dinners. That's very good.
I'm the crypto guy around the table, and you might be as well. So we have to deal with this kind of hard questions. And the way I was explaining it, which might resonate with you as well, is just imagine you start a new brand of candies and you start to sell on Amazon. And you become step by step more and more successful. And Amazon is very useful for you in your early days because they take care of bringing audience, bringing customers, they take care of the logistic on the backside. And all the early days are kind of pushed because you started your business within Amazon. And maybe later this brand of candy grow, and you eventually start to say, okay, I'm big enough now, I have enough of an audience, I should have my own website and my own warehouse, and starting to be much more independent. And that's probably the journey of many applications, starting on general purpose blockchains such as Ethereum or layer 2s, where a lot of the heavy lifting is provided by the network, and this is why you pay gas fees. And eventually, if you get successful enough and you need something much more tailor-made, and you have enough of an audience to be independent, some applications such as dYdX, we decide to say, okay, now we need our own kind of infrastructure. We are sizable enough, we have enough experience, we have really a good connections with our users and some early sign of product market fit. Let's build our own shop, let's build our own website, let's take care of our own logistics and marketing and all these things. So I think this is a nice way to explain how you can grow on someone else's shoulders and at some point being independent. And that's probably a way to illustrate the app chain thesis.
That's brilliant. I love that analogy. And I would like to try and extend it one step further, which is that in the early days of the web, launching your own website cost a lot of money, and setting up your own, payment modules and supply chain and logistics was very prohibitively expensive. But now you can do it very easily with Shopify and services like it. So I wonder if Ethereum is the Amazon of blockchains, then is Cosmos the Shopify of blockchains, or the SDK. It's like plug and play, like you are in control of your destiny, but it comes with a whole bunch of software mod things that make it easy to do. I don't know, maybe that's a stretch.
Alex, you're invited to my next Sunday family lunch. We're gonna have a great conversation.
I would never turn down an opportunity to have lunch with a French family anywhere. I'm sure the food is amazing. Charles, thank you so much for joining us today. That was a terrific discussion. I'm so glad. This will be the last episode of the year, and I can't imagine a better one. Honestly, such a wonderful discussion. We'd love to have you back maybe in a few months when the migration is complete, or to give us an update on how things are going. But that was wonderful. So thank you again. Thank you.
Thanks for having me.
All right, well, that's it for this week's episode of DeFi Decoded. And this year in DeFi Decoded, we've had some terrific episodes, some great guests, never a dull moment. Every year in this industry is like 10 in the real world. And that was certainly true for 2023. We will see everybody in the new year. Until then, stay safe, have a wonderful holiday break, Happy New Year, and onwards to a great 2024. Bye-bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.